World Bank has put out a new report, Nigerian Development Update. There it is for December 2020. They just released this just yesterday, Rising to the Challenge, Nigeria's COVID response. Now, of course, in this update, they're talking about Nigeria's response to COVID-19. They're talking about the projections they have for GDP for 2020, which as far as the World Bank is concerned, they're looking at a contraction of about 4.4%. Also, they're saying that growth will possibly return in 2021, but to the tune of 1.1%, which doesn't really help us much because population growth is at about 2.6, 2.7%. They also touched on a number of themes, agricultural, oil and gas, and the like. So we're going to be looking at that report in a second, as well as the touch points on the report. Also, we just talked about the lack of IPOs on the Nigerian Stock Exchange, but that doesn't mean the exchange isn't doing well. Let's take a look at, I think the market right now, trading has begun. I think the market is up by 0.18%, but this is how it closed yesterday. So the market was down by 1.27, 34,500 plus points on the all-share index, 6,441 deals, 553 million in volume, 6.63 billion in value. Equity cap, we're still above the 18 trillion mark. So how's the market performed this week? What does it mean for investors? What to look out for? We continue now. It's specifically the performance of the market. Joining me to discuss the stock market activity this week and review the World Bank report is Gbolahan Aina, Acting Managing Director at Cordos Asset Management Limited. Good morning to you, Gbolahan. Thank you so much for joining us. How would you characterize the behavior of the market this week?
Good morning, Rutus. Thanks for having me. So really, we've seen a lot of profit taking this week. We all know that the market has rallied quite some, and that has been fueled by the huge liquidity we've seen in the system. So this week, market has lost about 1.59%, and a lot of the banking counters have lost points. Majorly due to profit taking, a lot of those stocks have rallied in the past couple of weeks. So it's been shaped by profit taking activities, and also in the fixed income space, the NTB auction came out, and we saw the one-year NTB close at 3.2%. So some investors are thinking that yields on the fixed income instrument might begin to go up. And we saw a bit of sell pressure from some investors really willing to reallocate their portfolio from equity into the fixed income. But largely it's been shaped by profit taking and also lack of clarity. So last week, CBN came out with a policy about the special OMO, special treasury bill. And for the special treasury bill, we're not too clear about what rate was going to come out. CBN said that the banks can sell to PFAs, HNIs, and institutions. But in terms of the rates, that wasn't too clear. So the market has been bearish in the fixed income space. A lot of people thought that the rates were going to come high. But CBN actually credited a lot of the banks yesterday with the special T-bill at a rate of 0.5%, I think for 82 days. But so lack of clarity in the fixed income space, and also because we saw a lot of profit taking. But what we expect to see going forward, we want to see a lot of renewed interest in a lot of the banking stocks, because most of them are still trading at attractive valuation, with dividend yield of double digits for some of the banking stocks.
Okay, so as far as prior to the profit taking that we've seen, can you attribute anything? Well, as far as what we've seen, can you attribute it to fundamentals for the exchange, or more of a search for higher yields?
I think it's more for a search for higher yield. It's more for a search that there's no credible alternative. You agree with me, nobody wants to invest at almost near zero interest rates with inflation rates at over 14%. So that's negative real return, and that's massive negative real return. So it's the huge liquidity in the system that's really fueled the rally that we've seen in recent times. Earlier in the year, valuations were even more attractive, but investors ignored those attractive valuations. There was COVID-19, there was low oil price, there's a lot of uncertainty. But really what is fueling the rally we've seen in the equity market is more of a search for higher yield, not so much of valuation. But you agree with me that some stocks have double-digit attractive valuation, but really that's not what investors are looking for. Also, some foreign investors, or the FPIs, they are also looking for stocks that are fungible, the likes of Seplat, the likes of Airtel, so they're able to exit their equity position through stocks that have dual listing. So those are some of the things that have been fueling market participation in the equity market in recent times.
Thank you very much for pointing that out. Yeah, I even heard the same thing with the new gold ETF that trades over in Johannesburg. Getting in there and then exiting on that side. Okay, so that being said, Gbolahan, which sectors do you like?
Well, I would like to say I'm sector agnostic, but I'm not. So I like to look at the way the market has been in recent time. And the financial service sector, particularly speaking about the banks, because they play that financial intermediary role, they always make money. bad economy, good economy, the banks always make money. Either interest expense is low, but they always find ways to make money. So I love the banks. I love the usual suspects, GTB, Zenny Bank. They've proven to be resilient. They've proven to have strong balance sheets, and they've always proven to defy the odds. And for some of them, they're also long on dollars. So when we expect to see a devaluation, we expect for them to make some foreign exchange gains as well. I also love the telecom sector as well. And COVID has proven that this sector is a sector to watch. One, because the utility sector and utility sectors are defensive in nature. So while the general economy might be going down, utility sectors are things that you always need. Really, voice has come down, but data revenue has increased. And like one advice says, data is life, and that's what we've seen. So I love banking, I love telecoms, I love the industrial goods as well, which really those are the massive sectors we have at the moment. So banking, telecoms, and the industrial goods.
Excellent. Thank you so much for that. So how should investors approach the market? Should they have a long-term view? How would you say they should approach the market right now?
I think firstly, in terms of investment, it has to do with your own objective. So do you have long-term funds or short-term funds? So if it's long-term funds, you appropriately match those long-term funds with long-term assets. If it's short-term assets that you have, you can't, short-term funds, you can't be doing short-term investments. So if you have to invest in the equity market, it should be a long-term play because there are a lot of exogenous factors that are beyond your control. There are things that happen in the macro space that you can't predict. But if you invest in a stock market, really, you're investing in a company. A company is a going concern. So have a long-term view and invest in fundamentally viable stocks. So it's a long-term approach for equity market because it's more about capital appreciation as opposed to interest or safety.
All right, let's move to the World Bank report now. So the World Bank estimating that a 2020 contraction of about 4%, I think 4.1, 4.4. So with modest growth of 1.1% in 2021. Is that in line with your estimates over at Cordos?
Yeah, so for 2020, we have just a negative of 4% as well. But for 2021, we have slightly higher than 1%. We have about 2%. And we think that growth is going to be driven by the non-energy sector. Majorly driven by agriculture. Agriculture has proven to be resilient, also by the services sector as well, and really on the back of the low base effect that we have in 2020. We expect the oil GDP to be dictated by the OPEC plus compliance. So we expect to just see about maybe 0.8% negative. However, we expect manufacturing sector should still be in the negative, and we expect them to be plagued by the FX challenge and also currency volatility. So by and large, we expect GDP for 2021 to be about 2.46% by our own estimate.
Okay, all right. Now, on the matter of, I'm glad you mentioned the oil and gas sector. So the World Bank gave an overview of the sector, and this is telling us stuff we pretty much know, though. But 80% of our exports, oil and gas, 30% of banking sector credit, and about 50% of consolidated government revenues. Also, they added that the non-oil industrial and services sectors rely heavily on the economic activity and fiscal revenue generated by the oil industry. Gbolahan, is there any hope of diversifying away from, as far as oil revenues is concerned, with this level of reliance?
Well, if I say there's no hope, that means it's an hopeless situation. So I wouldn't say there's no hope. I think it's more or less doing what is right and doing it fast and doing it timely. So really, we have to diversify. We have to diversify our revenue. And really, that's a simple, basic tenet we are taught in investment. You have to diversify your income because businesses have cycles, returns have cycles. So it's important for us to diversify. And a lot of companies are also shifting away from oil. So the earlier we realize this, the better for us as a nation. So I wouldn't say it is hopeless. I would say something that we need to do fast, quick, and we need to act very timely. We saw the oil shock that we saw in 2020. It impacted our revenue. It impacted the FX. It impacted the foreign reserve as well. And that puts immense pressure on the economy, puts immense pressure in terms of the exchange rate as well. But if we have a diversified economy in terms of exports and we're able to earn revenue from other commodities or even other services or other part of the economy, is good for us as a nation. So we need to diversify quickly, and the earlier we do that or realize that, the better for us as a nation.
All right, thank you. So the report also talked about remittances from overseas. It said that half of Nigerians live in a household that receives remittances, which contributed to about 5% of GDP in 2019. However, the remittance source, so Nigeria's diaspora is concentrated in North America and Europe. Incomes are falling there, unemployment is rising there, and then there's of course the expected decline in remittances, which we're already seeing. Does this mean the CBN's recent policy move, which has been welcomed to liberalize receipts of remittances here, is it possible that may have been too late to take advantage of what could have been coming in earlier before COVID?
Yeah, so if it came earlier, it really would have been better, right? I like the Chinese proverb that said that the best time to plant a tree is maybe 20 years ago. The next best time is now. So if it came earlier, I would have reaped the benefits of it. But really, it's better late than never. And I think it's good. We saw the reaction in the parallel market. We saw the dollar or the naira strengthen against the dollar in the parallel market almost immediately. So it's not too late. It would have been better if it came earlier, but I would say it's not too late.
So now to thank you for that. To agriculture now, there's a quote that we have from the World Bank where they made an observation on food prices and where they said that, okay, so there it is. Before COVID-19, rising food prices were already putting pressure on inflation due to insecurity in the north, conflicts between farmers and herders in the Middle Belt, and Nigeria's closure of the borders. Then on top of that, the COVID happened. So as far as the borders are concerned, Gbolahan, are we moving fast enough to get them reopened? Is the government moving quickly enough to address this issue?
Well, I think we can move faster. For the border closure, really, it's been a mixed sentiment. Some people are for, some people are against. Initially, when they closed the border in August 2019, I know the Rice Farmers Association said that they're going to save the country about $400 million. So it's mixed sentiment. Really, what the government was trying to achieve was to stop smuggling of petroleum products, of rice, and all those kind of things. But on the back of it, we've seen increased inflation rates because obviously Nigeria is not food sufficient. And that's what the border closure has proven to us. We are not food sufficient. There are a lot of bottlenecks. There are a lot of challenges, systemic challenges, infrastructure challenges, security challenges as well. And that has affected food inflation. We've seen food inflation begin to go up on a month-to-month basis. So I think the earlier the better. Also, because people's purchasing power has reduced significantly, people have lost jobs, there have been high unemployment. When the GDP figures came out, obviously Nigeria is also in a phenomenon that is called stagflation, which is high unemployment, high inflation, and negative GDP, or recession, more or less. So I think opening the border is going to lessen that food pressure, and because there's a lot of transaction, a lot of import or export that has been limited, and some of those import and exports are legal. It's not all of them that are illegal. So some legal import and export haven't been able to take place because of the border closure. So I think the earlier the better. That's how I'll put it.
All right, thanks for that. So, Gbolahan, we said the earlier the better. If we look at everything we've talked about now with this report, with respect to diversifying our revenues away from oil, with respect to the pressure on food prices and the need to open the border, with respect to whether or not the remittance policy, which has been welcomed, should have happened earlier, do you expect the government to move faster in 2021 to address all these things?
Yeah, I do expect the government to move faster. For a lot of the policies that we saw in this year, they are quite welcoming. The PMS policy to liberalize the PMS. Also, the World Bank also alluded to that. But we expect the gains that they are saving from subsidies to be put into productive use. The power tariff is still neither here or there. So if all these reforms that was started, if you can begin to see it on a faster and a bigger level, I think we're going to see a lot of changes in the economy. But I think one area a lot of people are clamoring for is the FX regime. I think we want to see a more liberalized FX regime. The pressure we saw on the dollar was because some of the demand management, there was a lot of fear factors, a lot of people speculating. I think if there's a lot of clarity, that fear factor might reduce significantly. So to answer your question, yes, I think the government will do something fast.
Fantastic. Gbolahan Aina, Acting Managing Director at Cordos Asset Management Limited. Thank you so much for joining us to give your outlook on the stock exchange and as well as the World Bank's latest reports on Nigerian development update.